From the University of Westminster, this is The Week Ahead with Dave Coker.
Good afternoon, guys. It's Sunday, January 17th. My name's Dave Coker. This is, of course, The Week Ahead. Now, key events coming up. Remember, we take a look at 5 key things that you have to pay attention to. First of all, is there going to be a Biden bounce? Now, in general, the markets do tend to advance over the first 100 days of a new president's term. There's a lot of optimism, and the president has a lot of goodwill, so people tend to splash money around. Biden's going to have a tough job, so we're not totally sure. I still think there's going to be a bounce to the markets, if for no other reason, he's pledged to push 1.9 trillion in really fast. So when he starts these payouts to people, for instance, the $1,400 that he's promised to complete the $2,000 that he wanted to give everybody in the States, or give certain people in the States. When he gets this money out there, it's definitely going to be pushed back into the economy one way or another. So I tend to think there's going to be a big push up in the markets, a big melt up in the markets. But again, we'll have to see. All right, Janet Yellen, confirmation hearings coming in on Tuesday. It's the day before Mr. Biden's inauguration. And we're not going to see too much controversial stuff here. She's on board, allegedly, with the $1.9 trillion stimulus package. She's a safe pair of hands. She knows how to conduct herself in public. It should be a net positive for the markets. Again, it's something that's, we'll take it forward. U.S. Q4 earnings continuing. We'll have to see. We had some people report already. We're going to start to see the banks come in. So Bank of America, Goldman, Netflix is in there, Charles Schwab, a bunch of different entities that'll give us a good feeling for what's happening. We do think that we're going to see a decline overall year on year for Q4, but there's still a lot of money sloshing around, and a lot of people want the stocks to go up. They're almost willing the prices to go up. So it may not be that negative, even if there are disappointing to the downside. We have an ECB meeting, first one of 2020. This is taking place on Thursday. I'm so sorry. It's taking place on Thursday of this week. And of course, they've got stimulus as well on the continent. We'll have to see what happens as time goes on with this meeting and the announcements. They're lagging the States and lagging England in terms of their response. So it'll be fascinating to see if they start to accelerate things. And finally, rounding out the week, one of the big events you have to be aware of is that there's economic data, a slew of economic data. Of course, we look at subsets of it here for the US only. We just don't have enough time. But it's the US, the Eurozone, the UK, and Japan. And there's a lot of information coming out during the week that's of interest all the way. So please pay attention to all this stuff and see what happens over time. All right, guys, let's take a look at what's happened in the markets over the past week. This is the S&P 500. And you can see, remember the way this works, red is bad, green is good. And when I say red is bad, I'm assuming you're not short the market, which is really risky. You probably don't want to do it. But you can see lots of stuff getting spanked. Lots of the big winners. Tech, bam, getting spanked pretty hard. Microsoft, Apple, Google, Facebook, all these different entities are getting whacked. Mixed picture down there with financials. Visa's down, MasterCard's down, but the money center banks, JP Morgan, Bank of America, tended to do pretty well. Over on the right-hand side with consumers cyclical, again, mixed bag there. Tesla got their own problems. Amazon, not totally sure what's going on there. I'll have to take a look at it. You can see even McDonald's is down, and that's bizarre because here in England, they're starting to deliver. And not that we eat that stuff, but if you eat that stuff, you enjoy that stuff, it's good stuff. And I'm sort of surprised to see that they're actually getting pounded on a little bit. So it's a mixed bag overall. We're not totally sure how this is all going to play out over time. But again, keep in mind, about 80% of the time, the markets are up for the first 100 days of a new U.S. president. But what about the dollar? Now, we're starting to see the dollar weaken. Of course, you guys who've listened before know I've got fairly large positions in both gold and silver. And we'll have to see how those perform. Typically, we see the dollar weaken as the U.S. economy recovers, if for no other reason that there's a lot of stimulus, a lot of money is typically put in when the economy is in a recession or just emerging from a recession, like the case is now. So you can see we're taking a look at the dollar index, DXY, and we're at 2-year lows pretty much. We're really fascinating. Still, this is really interesting. This is going to impact on the dollar as well. This is off the wonderful Financial Times. It's a headline. Go log in or go pull the page up and read it. Basically what's going on is they want to get out from under America's thumb with respect to the dollar. They're reliant upon the dollar presently for lots of different things. And this has always been troublesome to me, guys, and I've spoken to you about it before. America has chosen to weaponize the dollar, and this has been going on before Mr. Trump. Mr. Obama did it as well, Bush to some extent. So when you weaponize the dollar, our allies can only take so much, and they're going to cut their reliance. What will that do to demand for U.S. dollar in general, U.S. dollar assets? We'll have to see. It's net negative, though, I would suspect, over the intermediate term. Now, we know that they're printing lots of money in the States. In fact, we know when we look at the U.S. money supply, roughly 21% of all U.S. dollars in circulation were printed in 2020. That's an amazing amount of money. Well, guys, look what's going on with tax revenues. Look what's going on with spending. Yeah, tax hikes are coming. It's just a matter of time. We're not totally sure when. There are people like Mr. Sanders who want to do them immediately because allegedly they're only going to hit the rich. You know, my views are, I think the definition of who's rich might change when they don't really don't really earn as much tax revenue from the rich as they wanted to. But we'll see. Mr. Biden, of course, has his own opinions, and we're not totally sure where he's going to shake out on all that. Still, when we take a look at what's going on with the dollar, the interesting question is, how are the big guys, the big players doing it? We've got non-commercial entities, asset managers, and leveraged funds. Really interesting, guys, because they're all net negative. They're all picking up these short positions on the U.S. dollar. They're not shorting the dollar because they think it's going to go up. They are positioned pretty well to make money, the asset managers in particular, if we start to see the U.S. dollar continue to weaken. All right. Monday, January 18th, holiday in the United States. If you don't know Martin Luther King, please go start with Wikipedia, read about his life, his epic struggles, and his contributions to our country. You have nothing to do in the markets unless you're doing Bitcoin or other things, so there's no excuse to learn about it. All right, January 19th, starting out the day at 11:30 a.m., we got 3- and 6-month T-bill auctions. Now, guys, the prior came in at 9 basis points for both. The yield curve at the short end is flat. We don't have a forecast, but check this out. I thought what I would do is I would show you a 2-year chart. This is weekly. Or no, am I looking at that? I'm looking at that weekly, yeah. I'm looking at this weekly over the past 2 years. And you can see, before the COVID problems, we were seeing 3- and 6-month interest rates, or yields, I should say, above 2%. And then with the Corona crash, as I call it, you can see they cratered. They dropped down well below 2 basis points. It was pretty amazing. They've recovered since somewhat, but they're just going sideways. And we'll see if things change with Mr. Biden's activities. We know the Fed is committed to maintaining low interest rates. I believe they're talking up to 2023, which is really amazing. And again, that's a reason why stocks are tending to boom up, because it's the old Tina. There is no alternative. How are you going to make money? Once upon a time, retirees could dump money into treasuries, pick up 6-7% in a very safe government bond. No, you can't do that now. You'd be crazy to put your money into treasuries, even at the longer end. The money just isn't there. At $1,600, we got foreign buying of T-bonds. We're getting a nice measurement of it. Prior, we saw a $20 billion contraction. We don't have a forecast. Keep in mind, $20 billion sounds dramatic. It's not. That's a huge market. But still, it's more the trend that's of curiosity. Here we've got something, Treasury International Capital, TIC. Net long-term transactions. Take a look at this when it's announced, guys. What we're doing is we're looking at the difference. We're looking at who is buying long-term bonds, typically 20-year notes and 30-year bonds in the States compared to who's buying it abroad. And we see demand's actually much higher. It's about 51.9 billion in the States compared to foreigners. And it'll be interesting to see how this plays out if we continue to see demand falling from abroad. I don't think we're going to. There's an awful lot of money whizzing around. And keep in mind, the U.S. out of the G7, in fact, the broader G20, the U.S. is one of the few out of the broader G20. It's the only one in the G7 that has positive real interest rates. Every other nation, they're net negative real. And you don't put your money into that stuff. You'll be really careful with that. On Wednesday, January 20th, at 0700 hours, we've got the Mortgage Bankers Association 30-year mortgage rate. Now, guys, once again, I just got to draw your attention to this. Unlike the UK, here when we take mortgages out, I don't have a mortgage. I live debt-free, but I did have a mortgage, oh God, about 20 years ago. Long story there about why I didn't took it. I should have just paid cash for that flat. But well, I needed a place to live, and it was one thing after another. But in any case, I had a mortgage. I got rid of it. I killed it in 8 years. Why? Because in the UK, when you borrow, I had a 25-year term, but the repayment terms, a 25-year commitment to the money, but the repayment terms are renegotiated every 2 to 7 years. No. I used to work in banking. I was in banking at the time, and there's no way my own kind are going to victimize me. So I got rid of that thing really fast. But in America, it's different. And this is actually pretty cool, guys, because in the States, you can take out a 30-year mortgage today, and you will know exactly what your interest rate, your payments are going to be all the way through every month of every year, all the way to the end in 2051. Why? Because the rate is fixed for the entire 30-year term. So it's down to 2.88%. It was inching up a little bit while before, about if you look at the videos, past videos, it was inching up about 6 months ago, and it's been falling since. 700 hours, we got the Mortgage Bankers Association's mortgage applications week on week. And again, this gives you some insight into that sizzling hot U.S. housing market that we've been hearing about. 16.7% increase in mortgage applications. 1030 hours crude oil inventories. Prior, we saw a drop of 3.2 million barrels. We're forecast to drop by 2.2 million barrels. We'll have to see what happens there. Oh, yeah, and check this out. Wednesday, January 20th, of course, is when Mr. Biden gets elected, the 46th president of the United States. He'll be speaking. We're just not sure about the time yet. That will be announced, but I would recommend that you pick that up live or pick up a synopsis of it really fast, just to see if he says anything that might move the markets. On Thursday, January 21st, at 0830 hours, we got building permits for December. And prior was 1.635 million. We're forecast to come in at 1.604 million. Of course, this isn't an actual construction start. This is the permit that they typically have to get from local authorities so that they can go shovels in the ground at a later date. But again, they rarely will. It happens, but they almost always will go ahead unless something changes. So it gives you an idea about what's going on with the also important construction sector in the States. 0830 hours, initial jobless claims. Prior is 965,000, forecast to come in a little bit lower, 868. These are new claims, guys. So this isn't the aggregate number. This is new claims. Of course, unemployment's breathtakingly high in the States. And we're forecast to bring in another 868,000, making their first claim for unemployment benefits in America. At 0830 hours, jobless claims, the 4-week average. I tend to watch that a little bit more closely than I do initial jobless claims, because initial jobless claims is volatile, bounces up, bounces down. And if we get a 4-week average, we got a smoothing function in there, and it gives us a little better idea. So still, it's not acceptable. 834,000 people roughly a week are making a claim for unemployment benefits. They're doing that because they lost their jobs, guys. And remember, unlike here in Europe, the social network or social support is really bad in America. You lose your job, you get a limited amount of unemployment, and that's it. Sad thing. All right, Friday, January 22nd at 0945 hours, 9:45 in the morning, manufacturing PMI, Purchasing Managers Index for January. Prior was 57.1. We're forecast to come in slight contraction, nothing serious, 56.5. And as usual, most of these numbers, guys, and as I've mentioned before, there's literally hundreds of these things every week that I've got on my list. I try to, for you guys, draw your attention to the 3 or 4 most important that I consider, because it helps you develop market awareness. You get a feeling for what's going to happen in the markets by looking, anticipating, and actually capturing the news when it's announced. 1000 hours, we got existing home sales for December. Prior was 6.69 million homes sold. Forecast is to come in at 6.54 million homes sold. So November was a blistering month. December is still going to be pretty hot in terms of home sales. And at 1100 hours, we got crude oil inventories. Prior, we saw a 3.2 million barrel drawdown. We don't have a forecast. Not totally sure what's going to happen there. All right, guys, that's it for the week ahead. Hope you have a safe and profitable week. And go ahead and make some money in the markets, guys. It's breathtakingly easy. There's no excuse not for you to be able to do it. Take care.